Mortgage rates hit highest level since May 2020. They soared to their highest level in more than a year and a half as expectation for a higher interest rate environment hardened after details of the Federal Reserve's last meeting were released last week. The rate on the 30-year fixed mortgage, the most common home loan for homebuyers, jumped from 3.11% to 3.22% last week, the highest level since May 2020, according to Freddie Mac. The rate is more than a half point higher than the 2.65% from a year ago, which also marked the all-time low for the rate. The strong advance followed a jump in the 10-year Treasury to the highest level since March 2021, following the release of the Federal Reserve's December meeting minutes, which indicate the central bank is preparing to initiate balance sheet reduction measures quickly in the months ahead. Fixed mortgage rates tend to follow the movement of 10-year Treasury yield, which jumped on last Wednesday after the Fed minutes showed that the central bank is ready to make moves to curb inflation that has accelerated more than anticipated. The effect of the higher mortgage rates already hit the refinance market, according to the Mortgage Bankers Association. And refinance demand continues to dwindle as many borrowers refinanced in 2020 and in early 2021, when mortgage rates were around 40 basis points lower. Refinance activities decreased 2% 2 weeks ago and was 40% lower than a year ago. The volume of the mortgage application for purchases also dropped 4% and was 12% lower than a week ago. With higher rates, home buyers face yet another headwind in the housing market. Housing inventory is still low in 2022, which is propping up high prices. Adding fast-paced inflation, and buyers are seeing their budgets shrink. At today's rate, a buyer of a medium-priced home is paying over $200 more on their monthly mortgage payment, adding over $2,400 per year to their housing costs. Even higher rates are likely on the way, according to the chief economist at Freddie Mac. With high inflation, promising economic growth, and a tight labor market, we expect rates will continue to rise, he said in a recent statement. There are some potential silver linings. If the latest biovariant is mild, could help bring an end to all the craziness this year, especially after winter passes. That would boost consumer spending and perhaps prompt some homeowners to finally list their homes for sale, helping to alleviate some of the inventory shortage issue. Robust new construction should also add to the supply. The combined effect of these factors would translate into more homes at better prices for many buyers in 2022. I'm Cindy Chen, and we'll bring you more market updates next time. Stay tuned.